Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having a fantastic day. Quick look here again at Bitcoin, seeing what's going on. It's going to be an interesting analysis here today because again, we got this weekend activity followed by a Friday dump. Typically, there's not a lot of great opportunities following this just because of how it resets a lot of the indicators. But what we can look at here is this ABC pattern. First of all, we are still likely to progress lower. I just want to kind of get out there as far as the probability is concerned with our ABC pattern here, the way that things are working here, getting rejected at that 0.5 fib level. It's a normal occurrence for the price to pull back after this. Okay, but again, not a guarantee. We don't attach ourselves to that idea. We just want to consider the fact that that's a possibility. We also want to look at the larger time frame too and kind of confirm if we're still looking bullish. Last I looked on the daily earlier today, we are still confirming the uptrend here, still above the 20-day SMA. We're not in bad shape. But again, this doesn't look fantastic based on the price action that we're seeing here. So if you're new to the channel, I ask you just quickly hit the like button, comment below, help grow the channel. If you've been watching for a while, obviously you've probably been doing that, and I thank you so much for it. Moving forward to what we want to look at, we open with liquidation levels and kind of just verify a couple of things here. This is the last month's worth of liquidation. Keep in mind, this kind of a bird's eye view. Well, we can see that there's a ton of liquidation, quite a lot in fact. If I saw the statistic on this, it's somewhere in the 1 billion or higher range at 72,000. So shorts could have a very bad day here soon if that happens. But as we can see here, a lot of liquidation to the downside is starting to disappear. And again, that's mostly longs closing their positions or securing profit, having been liquidated previously, whatever the case. We see that 67 to 69,000 range, almost non-existent now. Okay, again, this is the last 1 month. If we look at the last 7 days, it will tell us a slightly different story. And if we zoom in here, we can kind of see there is still some liquidation on the downside at about 68,300. And basically, in case you're curious why that's there, that's just below this most recent support level, where we can see price break down that low and didn't sweep all the liquidation to the downside, just most of it. Okay, so again, you got caught in that crossfire. I'm sorry, it definitely happens though. Happens to the best of us. We had a couple of stop losses too, so it's very normal. The key is to, bounce back and to keep a positive attitude about it, because this is just a learning experience, really. All it really boils down to is just, how much greed can the market continue to show here? So let's go ahead and take a quick look. In fact, let's start with a weekly, considering the weekly candlestick has closed, and we're just going to kind of get perspective here. Again, weekly time frame, we always like to look at moving averages. We've been above those for a while. We don't have anything to really concern ourselves with. The 20 SMA is right there at about 63,400. So me personally, the way things are shaping up here, we're still in decent shape. We can see stochastic swinging up. MACD is diverging. It's an interesting paradigm how that works, but me personally, when it comes to larger time frames, I like to look at these two things as kind of comparative, understandings of where we're at. The truth here is though that stochastic is still swinging up. That shows us we still have good momentum. While money flow index is pulling back and the RSI is right there at 70, we can see we're hitting somewhat of a resistance shelf too. So it makes sense for the price action to kind of be stuck where it's at, considering it's hitting that resistance range. But again, this doesn't tell us a whole heck of a lot. It just kind of lets us know that we're still mostly on the right side of the tracks and that we are getting kind of capped out with that resistance range there, and we have decent momentum. We can, of course, see the MACDs diverging, but we don't read into this specifically because it's been diverging for 1, 2, 3, 4, 5, 6, 7 weeks now. Okay, so it makes sense for it to be able to either recover or continue lower. It's usually when there's a shift in momentum that you want to be mostly concerned with the MACD on the weekly, and we're not there. We haven't been there for a while. If we can continue to push this upper 70 to 72K range, we might see that MACD convergence shift and let us know that we are good to send it. But for the moment, that's kind of where we're at here. So let's quickly look at the daily and just kind of recognize we're above all moving averages. Okay, this is still important. We got a nice doji candle 2 days ago. Of course, that was a weekend, a Saturday. But the price basically bottomed out, and now we've been slowly increasing here to retest that 0.5 fib level. Above this moving average, above the ascending trend line, we're above 50 on the RSI. Stochastic is now trying to swing up, just about to converge, and the MACD is essentially diverging. So while this isn't like a perfect situation, it's still mostly bullish. Okay, so we got to recognize that. We do lose, just say 69,000 today or tomorrow. I think there's a strong chance we could see that divergence and continuation lower. Again, we got that rejection initially off that 70,200 mark, that resistance range at that 0.5 fib level of previous support level turned resistance. That's usually how ABC patterns progress. So in that sense, we can kind of see that there is still a distinct probability the price could pull back. Again, we saw a decent amount of volume coming into this most recent candle. That's generally a favorable sign. We can see money flow index is very high, but you got to recognize this is a flawed statistic on Mondays because weekends have low volume. Okay? So again, this is the money flow index is of average, roughly approximate average the last 14 days 14 candlesticks worth of trading. On the 4-hour time frame, it works different, right? That's roughly 2.5 trading days. So if we do the math, we have good money flow index. It doesn't necessarily provide us with the best statistical data here. So again, I think we're a little premature to presume that being a very good thing, but MACD is converging, stochastic swinging up, we're over 50 in the RSI. Those are all positive contributing factors. So to me personally, those things weigh a lot more than the other things. So if you were to consider a long right now, it seemed to be more favorable than a short position, just based on the fact that we got a lot of reasons why the price action should continue higher. It would just make more sense for us to get maybe a closure at 70,200 or 70,000 or higher today before we can have some confidence. In fact, let's see if there is any confidence on the hourly. This is what kind of gives me confidence in taking a trade, is being above the cloud, which we are not yet, but we are progressing towards that. So you do see here, we're kind of right there at the edge of the cloud. Hypothetically, we close at 69,800 or higher today. We'd be naturally in that position to consider a long with some confidence. Now again, it's not going to be extreme confidence, right? The conversion line and the base line are intersecting. We've got the lagging span now free and clear. So we got 1.5 reasons right now, likely 2.5 to 3 reasons when the candlestick closes at that level later today. Okay? Again, we combine all this with everything else, we're still bullish on most timeframes. There's not a lot of bearish type of divergences that we can see. However, we do got to recognize that this 0.5 fib level, even 0.618, those are two areas that are commonly retraced after the price action recovers. So we could very well see this or the current scenario here where the price action just progresses lower. Again, it's kind of a tricky situation. So if you do end up taking a long position, maybe consider either multiple entry targets, because again, if 67,000 is retested, it wouldn't be terrible to average into your position. Or more important, maybe just consider keeping a tight stop loss. The price reverses itself. No harm, no foul. You can switch over to a short position, hit that good old reverse button. I prefer not to hit reverse personally, just because it's a market order, it costs more. But once again, different strokes for different folks. So it all depends on what you're looking for. But at this point, I would say we still have a larger statistical probability of the price going higher than lower. We do have this most recent high, just keep this in mind, that has just been retested as a new low, sort of. Again, this is not a perfect or exact situation, but we can see here, again, price action rejects out here at this point, comes up to break through that level. We could very well see a price action pivot off of 69,900 or 70,000 even. Okay. So again, a lot of interesting things going on right now, but with me seeing this large amount of liquidation on larger time frames, leads me to believe we could very well see another liquidity sweep here to the upside, because greed is a very powerful thing. So if we do see a sweep, make sure you secure profit just around that 72,000 mark. That's roughly where all that extra liquidation is. And a secondary target maybe in the low 74, upper 73s. Okay. All right, folks, that's all we got here for today. Thank you so much for watching. Do me a favor, hit the like button again, comment below if you haven't already. Join us over on our Twitter, Telegram, Discord. We got a lot of awesome stuff going on here. It's a lot of fun. We've even got YouTube Shorts and TikTok Shorts now too. Thanks again for everybody jumping on over there and helping grow the communities. Absolutely appreciate it. Look forward to seeing you in the next one. Have a great rest of your day. Take care.